Europe has set a highly specific target for its energy future, generating 89% of its power from emission-free sources by the year 2050. The Norwegian Water and Energy Directorate, or NVE, recently published its 2025 long-term power market analysis. This report adjusts that 2050 trajectory, mapping how recent shifts in global trade, military priorities, and inflation are actively rewriting the models. This timeline tracks the projected cost curves for green hydrogen and offshore wind. The data shows sharp upward revisions between 2023 and 2025, directly contradicting the optimism seen in earlier industry forecasts. Because these specific technologies were intended to replace traditional baseload generation, these capital escalations have forced energy analysts to severely downgrade their expected deployment over the coming decades. The stalled deployment of these baseload replacements necessitates a departure from the original 2050 transition model. Without these assets, Europe must rely on market mechanisms to prevent the frequency imbalances and load shedding that occur when weather-dependent supply fails to meet demand. The critical systemic threat to this 2050 grid is known as Dunkelflaute. This refers to prolonged periods, often lasting weeks, where both wind and solar output drop to near zero across the entire continent. To survive these extended deficits, European gas power generation volumes in 2050 are projected to remain roughly equal to what they are today. Because gas plants can spin up on demand when weather-dependent sources fail, their fuel and operational costs dictate the maximum price ceiling for the broader European market. With the ongoing phase-out of Russian pipeline networks, Europe's energy baseline is inextricably tied to the global liquefied natural gas market. Running these peaker plants will also incur the escalating costs of European Union carbon quotas, driving the operational expense even higher over the next quarter century. Fossil gas no longer functions as a cheap, everyday baseload fuel. It has become a highly expensive, price-setting safety net for a continent increasingly dependent on the weather. When you add zero marginal cost renewable energy to a grid, it actively reduces the market value of that same renewable energy. Economists refer to this as the cannibalization effect. This graph illustrates an economic supply stack curve overlapping with a 24-hour variable renewable energy output. By pushing the continent to 73% variable renewable energy by 2050, Europe guarantees frequent periods where generation capacity spikes simultaneously across multiple countries. During peak sunlight and high winds, the raw output from these sources completely overshoots total grid demand. With supply massively exceeding demand, the spot market price plunges to zero and frequently drops into negative territory. When prices hit zero, producers generate no revenue. As these overproduction intervals become more frequent, they destroy the profitability models for new solar and wind installations, effectively halting private investment. To counteract this, the market mandates the rapid deployment of utility-scale batteries paired with solar arrays. These batteries capture the excess off-peak generation and inject it back into the grid during high-margin evening hours. Building raw terawatt-hour capacity without deploying paired flexibility mechanisms actively breaks the wholesale electricity market. Historically, the Nordic grid has functioned with a significant surplus. In 2023, Norway recorded a net power balance of 22 terawatt-hours, providing a robust buffer for both domestic use and export. But domestic energy consumption is accelerating rapidly. From heavy industrial electrification to massive data centers and new hydrogen production, they are pulling vast amounts of power from the existing grid. This chart maps the Norwegian net power balance. Because consumption is scaling faster than new infrastructure can be permitted and built, the surplus is projected to crash from 22 terawatt-hours down to a vulnerable 7 terawatt-hours by 2030. Over the long term, models show the balance recovering to a 15 terawatt-hour surplus by 2050. Reaching stabilization requires adding 17 terawatt-hours of offshore wind, 17 onshore, and 10 of combined solar and hydro. Before those domestic generation projects come online, Norway faces a highly exposed, precarious decade of shrinking power surpluses. The extreme price volatility seen on the European continent does not perfectly translate to the Norwegian market, which maintains comparatively dampened and stable pricing. This stability is generated by Norway's highly flexible, regulated reservoir-based hydropower system. These structures physically store potential energy until it is needed. The system operates on an algorithmic import and export dynamic. When European renewables drive continental prices to zero, Norway imports that cheap power to preserve its own water reserves. When Europe experiences weather-driven deficits and prices spike, Norway opens the valves and exports hydro. Due to this constant shock-absorbing effect, the NVE forecasts that the average Norwegian wholesale price will settle at 67 øre per kilowatt-hour by 2030, before dropping to 58 øre by 2050. Physical water storage functions as a structural buffer, largely decoupling Norwegian consumer baselines from the volatility inherent in Europe's weather-driven price spikes. That 58 øre average, however, masks deep regional pricing disparities within the country, specifically between the northern pricing node, known as NO4, and the southern nodes of NO1 and NO2. Even with planned grid capacity reinforcements connecting the north and south, the northern sectors will structurally maintain lower average prices, projected at 52 øre per kilowatt-hour by 2050. This nodal network map of the Scandinavian grid highlights the variables of industrial consumption and wind generation in the northern sectors. The NVE uses sensitivity analysis to show exactly how rapidly long-term pricing models break when these variables change. If northern Sweden builds 4.5 terawatt-hours less industrial demand, or the northern node builds 4 terawatt-hours less wind, it forces a real-time price fluctuation of 5 øre per kilowatt-hour directly in the NO4 node. In a grid dominated by variable renewable energy, total raw generation capacity is no longer the primary indicator of security. Resilience now depends on the capability to dynamically flex and shift loads across geography and time.